Welcome back to FCL Accountants Tuition Center YouTube channel. In today's video presentation, I'm going to address a very complex relevant costing question. The students have a lot of challenges on this type of relevant costing. Therefore, I'm going to break it down so that you are able to understand. This topic is relevant to students doing ACCA skills level, performance measurement, CA 2.2, management accounting under ACCA. Also, students doing CIMA P1, management accounting, and those doing accountants under degrees and under diplomas at elementary level. This will be very applicable. I want to encourage all our viewers to ask questions specifically relating to this question in the chat box, and all the questions will be addressed depending on the availability of time. If your question is not addressed or answered, it may be due to overwhelming the number of questions that have been asked. I also want to encourage all our viewers to make comments in the comment section about the quality of the video. All the comments will be attended to and will be used to improve the delivery of our lectures. So today, I want to explain the relevant costing. Relevant costing is a costing method that is used by organizations when they have a one-off job or a one-off contract that is excess from the normal operations. The purpose of applying relevant costing is to ensure that the entity determines the minimum price to charge so that they are able to secure future business. Now, under relevant costing, we have the characteristics of relevant costing. Number one there, we have relevant costing is based on future cash flows. Very important. Future cash flows. Future cash flows. Future cash flows, implying that costs which have already been incurred are irrelevant for decision making and are referred to as sunk costs. Number two, opportunity cost. Opportunity cost. Under opportunity costs, we are saying an opportunity cost is any benefit foregone in preference for the best alternative course of action. Any benefit foregone in preference for the best alternative course of action. For example, a company has a piece of land which is idle, and because they are not using it, they are collecting rental income. Now, if they decide to use it on a project, the rental income will be foregone, and that rental income becomes the opportunity cost when evaluating the project. Number two example is where a company has an old machine, and if this machine is not used on the project or contract, it would be sold. If they decide to use this machine on the project or on the job or contract, the disposal value will be forgone, and that will become the opportunity cost on that contract. The carrying value of that machine is irrelevant. The purchase cost, which is the original cost, is also irrelevant because it's a sunk cost. So basically, those are the examples of opportunity cost. Number 3, we have incremental cost. Incremental cost. Incremental cost, that's an additional cost to be incurred in the future because of the contract or because of the project you're undertaking for a customer as a one-off. An example is where the fixed cost, ongoing fixed costs are 4 million. And after a contract is undertaken, it is estimated that the fixed cost will be 1.2. The $4 million is irrelevant because it's an ongoing cost. The incremental cost of 0.2 million will be an incremental cost and therefore relevant cost. So there are 3 characteristics. Now I want to explain the relevant costs of materials and labor. I'll get started with materials. Relevant cost for materials. You have to follow a diagram. The beginning is, our materials available? Are materials in stock? You want to do a contract. When you want to do a contract or you want to do a job or a project as a one-off job, you need materials. If the materials are not available, are materials in stock? If the answer is no, then the relevant cost will be the replacement cost. You need to buy. Replacement cost. If the answer is yes, the materials that you may need, they are available in stock. So the next question you need to ask is, are materials regularly used and replaced? Are materials regularly used and replaced? Are materials regularly used and replaced? If the answer is yes, then the relevant cost is the replacement cost. The relevant cost is the replacement cost. The relevant cost is the replacement cost. Replacement cost. If the answer is no, these materials are not regularly used and replaced. So the other question you're going to ask, do materials have alternative use? Do materials have alternative use? If the answer is no, the materials do not have alternative use, then the relevant cost will be the net realizable value, which is the scrap value of the materials. If the answer is yes, these materials do have alternative use, then the replacement cost is, sorry, the relevant cost is the higher value. The higher value of the net realizable value, which is scrap, and value from alternative use. Value from alternative use. So as a student, you need to understand this diagram because it is a very useful diagram when you are trying to determine the relevant cost of materials. Now, we are going to look at the relevant cost for labor. Relevant cost for labor. In order to determine the relevant cost for labor, you need to know the two situations when the company is operating under full capacity. Under full capacity simply means the entity has no space. All the employees are fully occupied. They are operating at 100% capacity. There is no idle time. So the relevant cost for labor in such a situation where an entity is operating at full capacity is, number one, overtime. If the employees can do overtime to meet the demands of the new contract, a one-off contract, the relevant cost will be the overtime done. The salaries that they are getting, they are irrelevant because whether they work on the contract or not, they'll still be paid. Number two, if overtime is not possible for the existing employees, they can hire. So there will be hiring charges. The hiring charges will be for employing the new employees to work on the new contract. If that's not possible, they can use the existing employees to stop what they are doing and work on the new contract. If they completely stop the job that they are doing, the relevant cost will be the contribution lost. Contribution lost from alternative work. This is why the organization decide that the current work they are doing is not as valuable as the new contract. So they will stop that and concentrate on the new contract. Therefore, the contribution lost from that job will become the relevant cost. Number four, there is also where the organization can decide to delay the existing job for a client, maybe delay for 2 weeks and use that 2 weeks to work on the new contract. So the relevant cost will be the penalty charged for delaying the work. So there it will be penalty charged for delaying the work. penalty charged for delaying the work. For delaying the work. So basically, that is the relevant cost for labor, where the entity is operating at full capacity. Now, where the entity is operating at excess capacity, there is excess capacity. Excess capacity simply means the entity has employees with idle time. There is idle time. So if that is the case, then idle time used on the new project, idle time, the relevant cost is nil. A very important point. If idle time is exhausted, then they have to do overtime. So under excess capacity, we have to use the idle time to do the contract, and the relevant cost is nil. If the idle time is exhausted, then the employees have to do the overtime, which will become the relevant cost. For example, if the idle time is 150 hours, and the new contract requires 200 hours, in this case, 150 will be idle time, relevant costing. The 50 hours, the employees should do overtime, and the cost of overtime will be the relevant cost. Okay, so now we can go to one special situation. Comparison. This is where the company is operating under full capacity, making a decision. Should the employees do overtime, or should you engage other employees to come and work out the new contract? So you compare. If overtime is greater than engaging, then you should engage. If engaging other employees is more expensive than overtime, then the organization will make the existing employees do overtime, and that will be the relevant cost. So now we can look at the question here. Under materials, the contract requires 3,000 kilos of material, okay, which is a material used regularly by the company in other production. The company has 2,000 kilos of material, okay, currently in inventory, which had been purchased last month for a total cost of 19,600. Since then, the price per kilo for material K has increased. So what is the relevant cost for material K? So if we go by the rules of determining relevant cost for materials, we ask ourselves, are materials available in stock? Yes, part of the materials is available, and the balance is not available. Are materials regularly used and replaced? Yes. Therefore, the relevant cost is the replacement cost with a price of which we are going to determine. So we can determine the price here. The price per kilo. Price per kilo will be the total price now. The total price now is 19,600. divide by the contract requires 3,000 kilos, but what is there is 2,000 kilos. So how much will be that? That will be 9.8. So we are told this will increase by 5%. Increasing by 5% is 1.05. 19.8. We have, how much is that? 10.29. Therefore, the relevant cost for these materials will be the 2,000 will be at 10.29. The balance of 1,000, since it's not there, you need also to buy it at the same price. Therefore, the relevant cost for 3,000 kilos will be 10.29. And this in total will be 30.870. That is the relevant cost for 3,000 kilos of material K. We go to another question there. The contract also requires 200 kilos of material L. There are 250 kilos of material L in inventory, which are not required for normal production. So now, if the materials are already there, okay, and they are not required, which means they are not replaced, then we'll try to find out, do they have alternative use? This material originally cost a total of the 125, that is the sunk cost. If not used on this contract, the inventory of material L will be sold for 11. So we did look at if there is no alternative use for the materials already in the inventory. The relevant cost is the scrap value. So we only need 200. So for material L, the relevant cost will be what we need, 200, is what we are going to use. Multiply by the scrap value, 11. This will give us how much? 2,200. Are we together there? Hello? Yes, we are. So we go to the next question now. We have the contract requires 800 hours of skilled labor. Skilled labor is paid 9.5 per hour. There is a shortage of skilled labor, and all the available skilled labor is fully employed in the company, in the manufacture of product P. The following information relates to product P. So which means if they stop making product P to work on the new product, we need to consider how much it will cost. The first thing that we need to do is to find out the skilled labor. How many hours? Skilled labor. How many hours do we need for skilled labor? Skilled labor hours. Skilled labor hours. We have how much? That is 38. Divide by per hour is 9.5. So the number of hours is 4 hours. After this, we need to find out How much is the contribution per hour? The contribution here is 40. So how much is the contribution per hour? Contribution per hour? Contribution per hour, we have 40 divided by 4. The contribution per hour here is 10. Is that okay now? And then now we can look at what will be the contribution lost, because here we need 800 hours. So the relevant cost will be contribution lost. Contribution lost is equal to 10 multiplied by 800 hours. This will be 8,000. And then how much are we paying? The pay will be 800 hours multiplied by 9.5. The pay there will be 76. So the total relevant cost, 15,600. This will be the total relevant cost in terms of labor. Now we go to the other part of the question. The last part there, we have, in order to complete the contract, a member of the finance team will be required to do 8 hours overtime. The individual's annual salary, 25,000, and they work 37.5 hours. Overtime is paid at a rate of 15 per hour. Alternatively, so if they do overtime there, they will be, first we check, there will be how many hours? 8 hours overtime. Overtime, that is 8 hours, multiplied by $15. This will give us 120. What is the other option? They work 37.5 hours overtime, okay? Alternatively, an experienced contract accountant can be hired to administer the project. In 75% of the time, it would take the internal finance department member to complete. The contract's rate is 25%. So now, okay, so we go to, this is contractor. The contractor, 25 multiplied by 8 hours, multiplied by 75%. That's what they will take. This will be 150. So to engage a contractor is more expensive, but to make the existing employee do overtime is cheaper. Therefore, the relevant cost will be 120. So that is the question at hand. We have done it. We have simplified it. We have broken it down into components where you can understand. Finally, I want to thank all our viewers, both existing viewers and the new viewers, subscribers. On behalf of FCO, we say thank you. God bless you. And remember, for the new subscribers to smash the notification button so that you are able to be notified when the new videos are available. Thank you and God bless you.